A big test for housing as supply surges and more homeowners come off ultra-low fixed-rate loans. Qatar Airways CEO speaks out for the first time about the federal government after the airline's plans to bring extra flights to Australia were blocked. And Subway launches a worldwide first 3-inch sandwich as inflation rises. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 18th of September, 2023. I'm Michael Thompson, and with Sean Aylmer still on holidays, I'm joined by Jennifer Duke. Jen, good morning.
Good morning, Michael.
Immediately after the show, Jen, you've got a great interview coming up with Chris Breike, who is pretty much a semi-regular guest on Fear and Greed. He's the founder and CEO of online investment advisor StockSpot.
Yeah, this time we were talking all about cash ETFs. That's what they are, how investors can use them as part of their portfolio, the risks in cash ETFs, and why they've suddenly surged in popularity.
Yeah, it's well worth sticking around for, coming up a bit later on. The main story, though, this morning, Jen, is all about the property market. The preliminary auction clearance rate over the weekend fell to 70.1% across the capital cities. That's down from 71.7% last weekend. And this could indicate that supply is outweighing buyer appetite at the moment, possibly leading to slower price rises over spring.
So the number of homes going under the hammer just keeps on growing as the weather heats up. And the weekend just gone was the busiest since April. So there were 2,334 homes taken to auction. That's the highest since the week before Easter, which was 2,687. Prices have been pretty hot over the past few months. But this slight slowing of the clearance rate could be an early sign of softness in the market. Sydney's auction clearance rate was under 73%, Melbourne's was under 70%, and Brisbane fell under 65%.
And we talk about on the buyer's side, Jen, it's important to look at what's happening in the mortgage market because about 880,000 homeowners have mortgages that are fixed to ultra-low interest rates, and they're going to expire soon, leaving some struggling to refinance or even afford their repayments.
Yeah, this could be more homes come onto the market. So there was a report in The Australian and that had exclusive data in it from Lendy, and that found that 3 in 4 of those mortgages are fixed to rates as low as 2%, and they're going to be moving to 6% or more over the next month or so. And it's the outer city suburbs across the country, those mortgage belts, where most of this pain will be concentrated. So this could see some borrowers struggle to prove that they're able to afford to service their loans, particularly for those whose income and expenses have changed significantly since they took out the fixed period a few years ago. About a third of the loans are yet to expire this year are in New South Wales. And what's worth pointing out, though, is that so far, forecasts of a mortgage cliff have yet to be realised.
Well, yeah, and we spoke to Roger Montgomery a few weeks back from Montgomery Investment Management, and he was quite strong on this particular issue, and he said, no, this is not a cliff.
Yes, he's calling it, I think it's a mortgage stepping stone.
Yeah, which sounds a lot more mild in his perspective. It's well worth actually going back and having a listen to that. Now, mortgage holders that are concerned about interest rates will no longer be looking to Philip Lowe for the next Reserve Bank movement because Michelle Bullock is starting as governor today.
That's right. Dr. Lowe said in an email to staff on Friday that he was proud of what the RBA did during difficult times, such as when the pandemic hit. But for much of the public, they're going to remember his tenure for the last 18 months or so when his forecast of record low interest rates until 2024 fell pretty flat. Bullock will make her first interest rate call in about a fortnight, and Treasurer Jim Chalmers says that she has a particularly busy period ahead. So she's moving into the role as the government aims to introduce legislation before the end of the year to strengthen the RBA's mandate, reinforce its independence, and establish separate monetary policy and governance boards. The government also needs to select a new deputy governor to work alongside Bullock.
Oh, of course. So there's a job going now within the RBA. Would a new deputy governor typically be appointed from within the bank?
Yes, there's a lot of discussion going on about that at the moment. Some people think it's going to be an external appointment given Bullock's come up from inside and to get a different perspective. But if it is internal, then Chris Kent is probably next in line.
Okay. All right. We'll keep an eye on that one. How did local markets perform last week, Jen?
So the S&P ASX 200 closed up 1.3% to 7279 points on Friday after a solid trading day. That left the week up 1.7%. Markets finished the week pretty upbeat with about stronger than expected retail sales and industrial production data from China, which was taken as a sign of potential stabilisation. But there have been some developments internationally over the weekend, which we'll get to in a minute. Every sector went up on Friday. Metals and mining, resources and materials led the increases. Best in town was Sierra Resources up 8.2%, BHP was up 3.5%, and Fortescue Metals climbed 4% with iron ore at its highest levels in half a year. The worst performing sector was real estate.
You mentioned international markets. What's going on?
So last week ended up being an interesting one for global equities markets. The Hang Seng was up 0.75% and the Shanghai Composite Index was down 0.1%. Euro Stoxx 50 was up 1.3% over the week. The FTSE 100 was up 3.1%. The S&P 500 was down 0.7%. The Dow Jones fell 0.1% and the Nasdaq was down 1.3%, and that's as the tech crunch continues to bite the sector. In terms of commodities, iron ore performed strongly over the week, helping lift local and some international stocks. The Aussie dollar starts the week at just over 64 US cents.
All right, we've got a fair bit to get through today, Jen. We'll be back in a moment with the rest of the day's business news. Jen, Qatar Airways Chief Executive Akbar Al-Barka has spoken for the first time about the Australian government's blocking of more flights for the airline.
So this news has gone global. Al-Bakr was speaking to CNN and said it was very unfair of the Albanese government. So the US has just allowed Qatar Airways to send more flights into North America. And he said it was especially disappointing as his airline had supported Australia during the pandemic, including getting citizens back home, delivering medical supplies and things like that. But he said he was still hopeful the government will listen to their case carefully and make a decision. He did say he had full confidence in the government, Parliament and Senate, and noted the inquiry that's underway.
On the airline theme, Jen, Minister for Government Services Bill Shorten has poised a somewhat barbed question at corporate Australia and really, largely, at Qantas.
So Shorten was asked on Sky News over the weekend whether Qantas chairman Richard Goyder and other board members should be resigning. This was specifically about the Australian Competition and Consumer Commission inquiry into the airline's cancellation of flights. That inquiry came after weeks of scandals that we talked about and a lost High Court case last week against unlawfully sacked workers. And Shorten said it was on them to decide. But then he added this line. He said, "You've got to ask that question. If they don't resign, what does it take to get a resignation in corporate Australia?" Quite a sting in that one.
That's actually quite blunt, isn't it? Considering that he dodged it at first and then just kind of went in all guns blazing.
It's a pretty firm comment, so you'd have to suspect that maybe the board's discussing those comments later on today.
It certainly does mount a fair bit of pressure on the board. Now, Jen, the New South Wales budget will be handed down tomorrow. There's been plenty of pre-announcements from the Minns government, including significant changes for electric vehicles and for housing.
So the New South Wales government is going to spend $260 million on boosting EV uptake. There'll be major infrastructure upgrades for charging with a focus on access for those who rent or live in apartment complexes and across regional New South Wales. But they're going to scrap EV rebates and stamp duty exemptions from 2024. Now, on the housing front, $224 million will be spent on the safety net. So that's the initial spend over the next year going to social housing to reduce waitlists that have blown out. This will actually build into the federal government's Housing Accord plan, which is being coordinated with states and territories at the moment.
It's always interesting watching these state budgets because there's often kind of similarities between different states. In your day job, you are, of course, the economics correspondent for Capital Brief. What have you seen in the lead up here?
So this is Treasurer Daniel Mookie's first budget, and he's already been tempering expectations. So he did one interview with AAP over the weekend where he said that they won't be able to fix every issue facing the state overnight, but they will be showing respect to essential workers. He said they're striking a very careful balance with a debt burden that's due to hit $187 billion by 25-26. And that's all following the COVID spending fallout, which many states are grappling with. New South Wales Labor has also been critical of the previous government, which they say left them with $7 billion worth of unfunded programs.
So how does this then play out in a national sense?
So analysts have been warning that any big spending initiatives could see New South Wales losing its AAA ratings, which typically affects the cost of borrowing. Victoria lost its AAA rating during the pandemic, but Mookie told the AFR that it's quite clear now that the AAA doesn't influence bond markets as much as it did in the past, which might be a big hint for what we see tomorrow. But we know that many states' budgets are under really significant pressure at the moment. We saw that pretty clearly in Victoria as well. It's likely there'll be a growing push for more support on the federal side, and we've seen that the Albanese government is eager to strike deals, such as on housing, and the National Health Reform Agreement is due for renewal in 2025. Now, one of the contentious elements likely to have a flow-on effect to other states is the cutbacks to film and television industries in New South Wales. That's worth about $60 million. This is a decision not to restore cuts made by the former government for 3 programs. The media union and screen producer groups have been holding urgent discussions with the government.
Yeah, there's been a bit of coverage of that over the last few days and the potential for big film projects to head north from New South Wales to Queensland and south to Victoria. So I imagine it's one that we're going to be hearing a fair bit about in coming days. Now, Jen, major bookstore Dymocks has suffered a significant cyber attack with customer details stolen and published on the dark web, leaving Managing Director Mark Newman saying he was devastated by the incident.
So around 1.24 million Dymocks customers have had their data compromised. This includes home addresses and contact numbers, emails, membership details, and their dates of birth. The information had been downloaded a number of times off the dark web, and customers have been emailed about the breach, with the business itself becoming aware about midweek that it had been a target of a cybersecurity incident. Apparently, it appears to have occurred through a third-party system, and a scam targeting customers since the breach took place has now also popped up, but it's kind of unclear if that's actually related. So Newman said in an email to customers that the company is apologising unreservedly and is committed to strengthening the measures they have to keep their information safe.
It's really just the latest in a wave of fairly significant cyber attacks, isn't it? And obviously there's different levels of security and different levels of kind of personal data that is stolen. And when we saw it happen with Optus and with Medibank, you're dealing with kind of passports and licenses, and with medical details here, it's kind of more about, oh, well, on the 24th of May, you bought Harry Potter kind of thing. So it's slightly kind of I shouldn't be trivializing it because it is very serious, and 1.24 million people is a lot to have been affected by it, but it just shows just how prevalent this issue now is.
What's interesting to me is how many of those customers will have been caught up in the trifecta, sort of the Medibank and the Optus. We know there's lots of kind of crossover of customers everywhere, and it must be quite disturbing to constantly be told your data's out there, your data's out there. Yeah, I think there'll be a lot of people wondering how to protect themselves.
Yeah. Now, developers are hitting back at state government plans to mandate inclusionary zoning, where they are required to include a portion of homes within a new development for social or affordable housing.
So this is already standard practice in South Australia, and other states and territories are now considering the idea. So Queensland's looking to build 900,000 more homes by 2046, and Victoria's considering a host of wide-ranging reforms for housing to boost supply, while New South Wales is offering a 30% floor and space height bonus, plus fast-track approvals for projects where 15% of the homes are counted as affordable. But the Urban Development Institute of Australia says that inclusionary zoning has been proven to reduce housing supply when it's been introduced overseas. The Institute says that uneconomic quid pro quo will not solve the housing crisis, and the Property Council of Australia's New South Wales arm is also concerned. Some local councils already require specific portions of new developments to contribute to affordable housing, though.
Jen, the Voice referendum is certainly heating up. It's not that long to go now. A $20 million advertising campaign across TV, digital, radio and print was launched over the weekend from the Yes campaign.
So this is an ad that lots of people are going to see. It features an Indigenous boy asking if he will grow up in a country that hears his voice. He asks if he gets to go to a good school and be recognised by decision makers in Australia. And it will see the advertisement on TV during the AFL and NRL finals. It was launched at the same time as the Walk for Yes action over the weekend, which featured a performance of Missy Higgins and other celebrities. Meanwhile, the No side has been increasing their outreach as well, with mass text messages reportedly from Jacinta Price last week encouraging a no via postal vote. And Warren Mundine, a leading no campaigner, wants the date of Australia Day changed, saying it's a fact that Indigenous Australians suffer due to colonisation.
Finally, Jen, before we get to international news, Australia's biggest ever marathon was run yesterday with over 17,000 people involved in the Sydney Marathon.
So this could actually see the Sydney Marathon become an official major marathon in future. Reaching this status would bring elite runners and more media to Australia's shores and potentially boost tourism and the local economy with tens of thousands of visitors attending the event. We're currently in the second year of a 3-year candidacy process, and if achieved, Sydney would become the 7th major in the world. So that's along with races in New York, Boston, Chicago, London, Tokyo and Berlin. So it's a pretty busy crowd. Last year, the Sydney Marathon became the first in the Southern Hemisphere to achieve platinum label status. And the second biggest marathon ever in Australia was actually in Melbourne in 2019 with 8,100 participants. So this was a pretty big day over the weekend.
Yeah, more than double. That is quite significant and also somewhat obvious if anybody was actually listening to those numbers. In international news now, Jen, the crisis at property development giant Evergrande Group is deepening. Chinese authorities have detained some employees from the company's money management arm.
So police in Shenzhen posted on social media over the weekend that they've recently taken action against the staff at Evergrande Financial Wealth Management, except they haven't disclosed the charges. They don't say how many people are in custody, and they only identified one person by their last name. Now, they did say their investigation into the business was ongoing, and they're encouraging investors to send them leads and complaints. The Evergrande property business that this division sits within is currently in the middle of a credit crisis that has become a central focus of the investment world. So Evergrande Finance has missed payments on about $8.6 billion worth of wealth products a couple of years ago, and at the end of August this year said it couldn't make payments due to liquidity issues. In the past, its own staff have been among the tens of thousands who have bought its products.
Now, major strikes, Jen, have kicked off in the US, but this time it's not Hollywood, it's the car makers. And it's 12,700 workers at 3 plants who are all walking off the job.
So United Auto Workers have gone on strike against all of the major Detroit car makers. That's Ford, General Motors and Stellantis, which makes Jeep Wranglers. There have been weeks of discussions between the big car manufacturing companies and the unions, but they've failed to reach an agreement. Now, the unions may step up their strikes as this intensifies and add additional plants to increase the pressure. In the meantime, US President Joe Biden is sending his own officials to try and get the deal sorted. Biden's criticised the automakers for not sharing profits fairly with workers. Ford actually decided to lay off hundreds of workers just hours before the strikes began.
And also in the US, Jen, the state of California is suing major oil companies, including ExxonMobil, Shell, BP, ConocoPhillips, and Chevron. They've really kind of picked the big ones, haven't they?
It's a really, really big case. So this case is claiming that the businesses have misled the American public. And the New York Times is reporting that it centers around billions of dollars in damage due to climate-related disasters across the state. And it claims the companies have downplayed the fossil fuel risks to the public. So California wants an abatement fund to be created to help pay for future damages caused by any other climate-related disasters across their state. No doubt there's a lot of other jurisdictions watching on to see if this is something that they can also pursue.
Oh, to be a lawyer in California right now. Goodness me. Now, finally, Jen, we all know that you can get a 6-inch and a foot-long sandwich at Subway, but the chain has now launched a 3-inch sandwich, and it's because of inflation.
So the sandwich has initially been launched in Pakistan, and it's the first time a small 3-inch sandwich has been made available. So according to a spokesperson for Subway, it's a value offering for customers in Pakistan, which is currently dealing with the fastest inflation in Asia and a major cost of living crisis. In August, its inflation was cooling, but it was still at more than 27% on an annual basis. And this is leading to rising prices and smaller products, such as the mini Subway sandwich, which costs 360 rupees or $1.90 in Aussie dollars. Interestingly, another inflation phenomenon is in the UK, where pubs are introducing surge pricing, or unhappy hour, as local media has termed it, where the cost of drinks goes up in peak hours.
Jen, one of my most embarrassing experiences in my life was because I'm a child of the metric system. When I walked into Subway once and I asked them how much longer a foot long was than a 6-inch. And they looked at me like I was crazy. And they said, it's exactly double. Okay, understood. And I've never forgotten that moment.
That is really awkward.
Yes, it was. And I'm uncomfortable reliving it right here with you. Now, up next is the Fear and Greed Daily Interview. You are speaking with Chris Breike today, the founder and CEO of online investment advisor StockSpot.
We got to talking about why the banks are so slow to pass on interest rate rises and what the alternatives are for those who don't want to be paying the loyalty tax at the moment.
It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't miss as well Fear and Greed the week ahead, featuring our resident economist, Stephen Koukoulas, everything that's coming up this week and his take on everything that happened last week as well. Thank you very much, Jen.
Thanks so much, Michael.
It is Monday, the 18th of September, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.